Cement stocks, Ultratech, ACC, Shree Cement surge in trade as reports indicate price hikes by cement companies may be there. Brokerage firm CLSA is also bullish on the sector, expects a rebound in demand for cement companies.
PNC Infra rallies more than 10% after its arm completes a HAM project with 740 crore rupees, which gets cleared from the commercial operations.
Avenue Supermarts under pressure after brokerage firm Goldman Sachs issues a bearish note on the stock, cuts earnings estimates for the company, and the target price pared from 4,000 to 34.25.
Swiggy is under pressure as the lock-in period for 6.5 crore shares opens today. The stock is down close to around 4.5%. Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. The markets are holding mildly in the green. The Nifty bank seems to not be informed today, and that could be the swing factor today. If it can see a bit of a recovery from the day's low, maybe we move towards that resistance level of around 24,700 odd. But otherwise, if it wants to go down and test recent lows, then maybe, in fact, we'll see some bit of pressure on the markets as well. Hey, Mangalam.
Hi, Nigel. A lot of stocks actually buzzing around in today's trading session. So we do have, names like Max Healthcare, Syngene, CAMS, GSPL, all of them, apart from the stocks that we mentioned in the headlines as well, doing extremely well. Kalyan Jewellers is the other one, which too has seen a recovery from the lows, currently up 4% for this week so far. And we do have a bunch of frontliners trying to, claw back some of the losses that we saw in the earlier part of the week. Trent is one of them, and Shriram Finance continues its tear upwards, up nearly high single digits for this month itself. Good time to get in Chandan Taparia of Motilal Oswal Financial Services for a quick technical check on the market. Chandan, we've been in a very narrow range for the last 3 or 4 trading sessions. Do you think the range breaks out anytime soon? And if yes, then on which side?
Yeah, good morning, Mangalam and Nigel. Thanks for having me. So Nifty has seen a consolidative move of last 3 trading sessions, and it seems that now next leg of rally could be there. The good part is that the just couple of days back, index gave a breakout from its inverted head and shoulder pattern, which has bullish implication. And the breakout came near 24,400, 24,444. So retest of the key support is again giving the press sign of the up move in the market. We have seen a decline in India weeks with hold of put call ratio, which also indicates some support-based buying. So I believe with support of 24,444, Nifty index has potential to head towards 24,850 to 25,000 marks. Talking about Bank Nifty index, which is comparatively outperforming the broader market from last couple of weeks, we have seen a decent momentum in the breakout, and now it's all set for a narrow range breakout of last 4 days. It's just 1,000 points away from its lifetime high, and recent price pattern indicates fresh leg of rally. So with support of 53,000, I believe this time Bank Nifty can head towards 54,000 and may test the lifetime high of 54,467. So positive view on both the indices with buy on decline stance and expecting Bank Nifty to hit first lifetime high compared to the Nifty index. Now looking at the stock wise, first that is buy on JK Cement. We have seen significant open interest addition for the day by more than 25%. Poland flag pattern breakout is clearly visible with buying in most of the cement counter. Volume is also rising with V-shaped recovery on the weekly chart. So with support of 46.20, recommended to buy on JK Cement for an upside target was 49.50. And one more idea I can discuss about Mahindra & Mahindra, which is holding well and supporting to its rising support trend line. We have seen a consolidation breakout of last 38 trading sessions. So with support of 3,050, Mahindra & Mahindra can hit towards 32.50 marks.
Okay, all right. Thanks a lot for that, Chandan. Well, let's move on then to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra of moneycontrol.com joins us to talk about a stock that he's tracking closely. Jitendra, over to you.
Hi, thanks. We like Water Gobag, a leading player in water treatment with robust order book and focus on high margin projects. The company is set to deliver strong growth. In Q2 FY25, Water reported 5.3% year-on-year growth driven by 25% increase in exports revenue. EBITDA rose almost 9% while net profit surged by 27%, aided by high value projects and cost control measures. It secured 4,600 crore of new orders during H1 FY25, including 2,700 crore project from Saudi Arabia. Watek is projecting 2,000 crore revenue in second half of current fiscal. Focused on high margin international and industrial projects, the company is poised for continued growth with an expected order book exceeding to around 16,000 crore by FY25, which is almost 5 times its annual revenue. Besides its focus on high margin projects and increasing increasing O&M contracts, the company is expecting better earnings growth. Management projects almost 15% CAGR over the next 3 to 5 years, with ROCE improving to 22.5% by FY27, driven by, of course, asset-light approach and effective capital management. Stock is trading at 28 times its FY26 estimated earnings, which we believe is attractive considering a strong order book, higher margins, and of course, a large size of opportunity.
All right, with that, we'll, just before taking a short break, a couple of stocks which are surging right now. Syngene has moved to the high point of trade, up around 4% right now, as seen a spike come by in just the last few odd minutes. And then a bunch of these cash stocks actually, picking pace today. Titagarh Rail Systems is one of them, up around 9%. The entire rail pack actually, club that with something like a Texmaco Rail and the others as well, all of them spiking as we speak. So we'll keep an eye out on all of that, a bunch of stock-specific action. And on the other side, we'll talk about, the IPO that opened today as well. Welcome back. You're watching us here on Chartbusters. While, a bunch of stocks are doing well, the ones which are not doing well, and that is Swiggy. Swiggy is actually down about 4% in today's trading session. Remember, from yesterday's high, it's been a correction of almost 6.5 odd percent, largely on account of one factor. Remember, on November 12th itself, the stock listed, so making it the 1 month lock-in period, which ends on December 10th. And as a result of which, on December 11th, which is today, almost 6.5 crore shares, or 2.9% equity, has been opened up and eligible for trade, making a total of 12% equity, which is eligible for trade. What happens to the remaining 88%? Well, the next tranche comes on in stream when it comes to out of lock-in on Jan 28th, Jan 30th itself. So we'll keep an eye out on that space. Swiggy is one of those stocks which is under a wee bit of pressure today. In a conversation with CNBC-TV18's Prashant Nair, rare enterprise partner and market veteran Amit Goyla speaks about the high gestation period for bruised blue chip companies and their experience with Escorts Kubota.
The gestation period is infinite. It can be 1 year, it can be 2 years, it can be 3 years. See, once you bought this, you are in, because you normally would want to buy it when, at least what I have seen was that the commitment was very strong. When you identified something like this, you would back it up with and put serious money behind it. So there was no question of entry, exit, getting in. So you were in it. And so there have been periods when the stocks, I have seen stocks which have been bought in front of me for 1 year, 2 years, they've done nothing. So we've been plagued with serious self-doubt, serious frustration. We have felt at a point of time there were 3-4 stocks in our portfolio which were turnaround stories. The markets were booming and we thought we are sitting in a bear market. So it's very difficult to go through these periods. You really need to be convinced. See, look, money can't be just gone and you can't find a 10-bagger, 20-bagger like that. Yeah. So you have to go through the pain, and we've experienced, Rakeshji has experienced serious pain. Yeah. He's not only experienced serious pain, he's experienced serious drawdowns from the time he has bought the stock again also. Even at the low levels from there also I've seen some stocks heavy.
Why don't you talk about your Escorts experience? Because you guys minted money in that, but the kind of pain you go through.
Yeah, so Escorts for 3 years did nothing. And it was we bought Escorts in 2013. Rakeshji bought it in 2013. 14 to 17, the mid-caps went basak when Mr. Modi came. Escorts did nothing. And it was a very large position for us. So we were continuous self-doubt was there. We would keep examining our position. We would keep thinking what is happening. And as it is, like Mahindra was a 40% player. They were a 10% player. Are they doing it right? Even the external factors were not good. The weather situation was not good. Competition was discounting. So it was a very tough period for 3 years. But then suddenly when things started turning, they turned around much faster than anybody could have expected.
Well, Goyla also spoke about the big bull, Rakesh Jhunjhunwala's investment style, and likened it to be similar to the bruised blue chip kind of investing. Let's hear that out.
So Rakeshji was the practitioner of this kind of investing. I was supporting him, I was helping him doing the work, but the real practitioner was Rakeshji. And I've seen him consistently over a period of time pick stocks like this which were in trouble or the companies were in trouble, and he's made serious money in them. And the quote, the starting, he never coined them as a bruised blue chip or anything of that kind. He was a value investor. And his starting point was that cannot be a loss of capital. See, he would invest through leverage. And he would service the debt through either dividends or from trading income. But PE was quite critical, and dividend, like sometimes most of these companies were not even giving a dividend because they were in bad shape. So the PE was very critical. The market cap in terms of the opportunity, that was very critical. Those are the couple of things he would look at. And he had a very open mind. So he didn't, it was not, I will only look at one sector. He invested across sectors.
Okay, interesting talk on that. We'll keep getting you sound bites all through the course of the day. But let's talk about another stock that's under pressure, Avenue Supermarts. This after Goldman Sachs has gone ahead and cut estimates for the company. Mangalam, fill us in with their rationale. The stock as has seen a correction from the top, but they believe there's more downside in stock.
They've been sellers on the stock for a while. They believe that there's more downside in the stock because remember last week we had spoken about how there has been increased discounting in the quick commerce space, and as the values of the basket stands, it is at par with DMart. Earlier, the moat for DMart was that they've offered products at the cheapest price as compared to the market, and that's where Goldman Sachs believes that it is facing increasing pressure. In fact, DMart has to go ahead and increase their discounts as well to maintain their competitive advantage. And the number of stores that they have outside of top 10 cities will be where they will start to grow. And, store opening is something that the street will be eyeing going forward for DMart itself, whether that opens as fast as it has been opening in the past as well. People want DMart to open more stores and much faster as well. Because of this discounting, lower revenue growth estimates as well, they believe that, their EPS estimates, what they had earlier, needed to be trimmed from around 4 to 6% itself. And that's what they've done over the next 3 financial years. And their target price, which was earlier 4,000 rupees, now stands paired at around 34.25. Two other factors that may be impacting the stock in today's trading session. One, it's the first time there has been a target price cut coming in on DMart ever since the stock's come into F&O. So before that, there was only cash trading. Now with F&O trading, could there be a case of increased short positions being added once there is a negative note? The same thing that happened with LIC yesterday as well. The second thing that I'm looking at is we also have the Vishal Megamart IPO that opens today. They've had revenue growth of around 24 to 26% over the last 3 years. They've offered the company the shares to shareholders at around 55 times 1 year forward earnings, as against DMart itself, it's trading at around 80 times. So with all these factors coming together, maybe there is some underperformance that we're seeing. Mind you, the stock has already seen a correction, currently sitting with a cut of about 2%.
All right, Mangalam, thanks a lot for that. Well, let's move on then. On the sidelines of the Rising Rajasthan Summit, my colleague Rachna spoke to Mr. Kumar Mangalam Birla, the chairman of the Aditya Birla Group, and began by asking him about his thoughts on the state of Rajasthan as the next big hub for investing and building enterprises. Let's listen in to what he had to say.
I'm from Rajasthan, my family is from Rajasthan, and we are very proud to belong to this state which is, stands for enterprise and risk-taking and, social enterprise as well.
Right. You did give us a snapshot into your investments and how they would be increasing. Can you take us through, you spoke about fashion retail, would have
Yeah, we have about 30,000 crores of investments planned over the next 5 or 6 years in the areas of cement, renewable energy and retail.
All right, interesting conversation out there. Take a short break, come back, hear more on the markets and a lot of stock-specific action. Stay with us.
Welcome back. Well, we were talking about Avenue Supermarts, and in that context, Mangalam briefly mentioned Vishal Megamarts that's coming out with an issue, the 8,000 crore OFS. Mangalam, tell us more about that.
There is a fair amount of excitement. It's almost $1 billion offer for sale which is coming in, opens today, closes on December 13th. You'd be like, why is it that it's 8,000 crores and none of that money is going into the company itself? The promoters, Samayat Services and Kedara Capital, bearing some stake, they've said that they don't need the capital. They have about 700 crore of cash on their books, and all of that would be funded internally itself when it comes to their store expansion. It is a diversified retailer present across India. They have 645 stores, around 414 odd cities. What's interesting is that, two things which stand out. Their revenue mix. 75% comes in from general merchandise as well as apparel, which is high gross margin. So their gross margins are around that 20% mark. And importantly, 73% of their overall revenue comes in from their own private label as well. So these are factors that the management believes will stay steady going forward. And that explains why their EBITDA margins have been in the range of around that 13.5% to 15.5% over the last 3 years as well. The revenues of the company have compounded between 24 to 25% over the last 3 years, as has the EBITDA margin stayed stable, the net profit as a result of which has also grown. The question is, how much are they asking for what they are giving? The valuation. At the higher end of the issue price, they're seeking a market cap a little over 35,000 odd crores. Given the kind of profit growth estimates that the street is making on this, it could be anywhere around 55 to 56 times 1 year forward earnings. Compares with D-Mart, V-Mart and Trent, anywhere between 80 to 110 times. Remember, they have left some value on the table, but going forward, double-digit same-store sales growth and double-digit store additions with margins being maintained is something that we'll most definitely keep an eye out on.
Okay, Mangalam, thanks a lot for that. Well, let's focus on the other issue. That's SciLife Sciences. Their 3,000 crore IPO has also opened for subscription. Vinny joins us to fill us in with more details. Vinny?
So this company is actually a CDMO company, and very interesting because they go on from the phase of discovery with the company to the time when the product is actually launched. So it's a very different kind of a company that we're seeing coming in terms of a IPO for the company. 3,000 crore IPO size, most 950 crores is fresh issue, and there's an OFFs of around 2,000 crores where we are seeing some promoter selling as well as PE selling by TPG and one more private equity also, which is looking to sell some stake, and some other sellers in it. So yes, most of it is going to be an OFS that we're seeing. Now, post-issue market cap for the company is around 11,400 crores is what they're looking at in terms of a market cap. And when looking at in terms of the numbers of the company, the first half of the year this time, they managed to see a 5% growth. And previously, they've seen a 20% growth in last year and around that levels in FY23. So it'll be interesting to see how this growth actually shapes up for the company. Margins is where the interesting factor is coming in. They've reported a margin of around 20% in FY24, similar in H1 FY25 as well. The company said that, they expect these margins to continue going forward and actually see an improvement on that front. So let's keep an eye out on that, because versus other CDMO players in India, this margin level is still something that is lower. Though in terms of valuations, what analysts are highlighting that the valuations for this, the PE ratio that is calculated as of now on the FY24 basis, that seems to be much higher than other CDMO players. So how much value is there for investors is something that is a concern for some of the analysts on the street.
All right, Vinny, thanks a lot for that. So that's about SciLife Sciences, but we're not done with IPOs yet. MobiKwik Systems, it is a digital payment platform. 572 crore IPO opens for subscription. Abhishek joins in with the details on that one as well. Abhishek.
Well, MobiKwik has opened its IPO today and it will close on 13th of December. The price band is 265 to 270 per share. The IPO size is 572 crore, which has been downsized as well. So expected market cap is about 2,087 crore to 2,168 crores. Now, valuation based on, Q1 FY25 sales, which have been analyzed, it's priced to 1.5 to 1.6 times market cap to sales. In terms of equity dilution, it will be around 35-36% of equity dilution. They are into business of payments, consumer credits, as well as some investments. Now, the SWOT analysis that I've done on this IPO strength is that they have a large engaged customer base which has been acquired with low customer acquisition cost. Weakness is that the IPO size has been cut down from 700 crore that they were planning in Jan of 24. It's been brought down to 572 crore in December of 24. So qualification from statutory auditors, they keep coming every now and then for them. They have been certain deficiencies or irregularities in managing records and compliances with the regulator, that is RBI. Opportunity India provides a huge opportunity for platforms like MobiKwik, and the threat is that security breaches and attacks against the platform, they may not be able to maintain their growth rate that they had seen in prior years. And competition from other players, especially banks, even small banks are right now making their own digital platform which could provide competition to them. In terms of anchor book investors, we have SBI MF, Quant MF, SDFC MF, Morgan Stanley, and a huge bunch over there. Back to you.
All right, Abhishek, thanks a lot for that. So that's about MobiKwik. In fact, management of MobiKwik will be joining us shortly at 11:25 a.m. today itself to discuss their post-listing growth strategy. Right, with that, what we'll do is take your leave on this edition of Chartbusters with the news that the market's pretty much where it was when we started the show. The Nifty Bank underperforming a tad. We take your leave, come back on the other side. We have the team of Trading Guard take the market action forward. Thank you for watching.